This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, June 1st, 2016. Euro dollar. So the euro remains under pressure after recently breaking down below 112, and the focus now is on next key support at 110.58, below which guards against that 108.23 more significant medium-term support further down. At this point, look for any rallies to be very well capped ahead of 114, with only a break back above that level to really delay the bearish outlook. Sterling dollar. So cable remains under pressure with the market still unable to establish above 147.70. We've seen multiple attempts to try to take out that level, but the market continues to stall, and this puts the focus back on the downside with a focus on next key support at 143.33. At this point, it would take a break back above 147.70 to officially force a shift in the structure and suggest a more significant base is in place, while inability to do so does expose that 43.33 next support, below which would then expose deeper setbacks towards those recent 7-year lows down below 140. Dollar yen. So dollar yen is showing signs of finally putting in a lower top after the market stalled out ahead of 111.89 the other day. At this point, there is risk for fresh downside now back towards those recent multi-month lows at 105.55. If we do see a break back above 111.89, however, that would suggest that we're seeing a shift in the structure and end the current downtrend. But again, while the market holds below 111.89, the risk is for this lower top and fresh downside extension back towards those 105.55 lows. Euro Swiss. So Euro Swiss has seen some mild setbacks in recent trade, though overall the price action is constructive, with the market looking to put in another higher low ahead of the next upside extension beyond 1130 and towards that yearly high and multi-month high at 112 further up. Aussie dollar. So Aussie has finally entered a period of consolidation and correction after breaking down below the 200-day moving average, though overall the pressure remains on the downside, and any rally should be very well capped into previous support turn resistance around 74.15 ahead of the next downside extension back below recent lows and back to potentially towards the 2016 low at 68.27. Dollar CAD. So dollar CAD has been showing signs of a major base over the past several days, and the market now looks to put in a next higher low at 29.11 about, which will be confirmed on a break back above 31.89, exposing and opening the fresh upside extension towards the 135 area further up. At this point, only a break back below 127.72 would compromise the newly adopted constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has seen a nice little bounce in recent trade. The price action favors additional downside, with the market seen well capped into rallies as the market continues to be very well capped into medium-term resistance above 70. Look for a lower top ahead of the next downside extension below 66.75 to expose next key support at 65.46, which guards against the 2016 low at 63.47 further down. SPX 500. So the S&P 500 has rallied back above 2100 in recent trade, though on a medium-term basis, the price action continues to favor the possibility for a top as the market continues to stall out above 2100 and ahead of that record high from 2015 at 2133. Look for a break, though, back below 2020 to really confirm and strengthen the topish outlook and accelerate declines, potentially exposing a retest of the 2016 base at 1808 further down. A break back above 2112, however, would expose a direct retest of the record high from 2015 at 2133. Gold. So gold continues to be very well supported on dips, and although we've seen some major setbacks in recent trade, the market has found some support into that previous resistance area around 1191-1200. However, we would need to see a break back above the previous weekly high around 1257 to take the immediate pressure off the downside and suggest that this market continues to show signs of basing in favor of an eventual break back above the 2015 high at 1307 and to head towards 1400 further up.